Good morning. My name is Idowu Agumiade, and we are going to be looking at bank charges. Now, under bank charges, we are going to be looking at the meaning of bank charges. We are going to look at the examples, and we are also going to consider the accounting entries. Now, for the accounting entries, there are two perspectives in which we are going to be looking at it from. Firstly, from the bank's book, and also from the customer's book. Now, bank charges, we say bank charges are the various fees account holders are charged in respect of maintenance of the account, along with any other charges incurred in respect of specific transaction. And we mention examples here. So let's take the first example. The first example we're talking about is check clearing charges. Now, for customers who operate with a particular customer, they may bring check from another bank. So let's take this scenario. Let's assume I have an account with GTB and I want to make payment into GTB, but I have a Diamond Bank check. Now I bring Diamond Bank check, submit it with GT Bank. Now for GT Bank to process that particular check for funds to come into my account at GT Bank, it has to go through a clearing house. Now for that particular process, there is a charge that is attached to it. So that particular charge is debited into my account with GTB, and it becomes an income to the bank, which is helping me to process it, which is GT Bank. So the process is that my bank account at GT Bank is debited with the amount the bank wants to charge me, and the bank also credit their general ledger, which is going to be fee and charges with the same amount in which they are charging me. So also for fund transfer charges. Fund transfer charges, these are the charges that come along transfer that are made maybe across bank, on assumption that I want to transfer, let's say 2.5 million from my account at First Bank to my account at GTB, or I want to transfer money from my own account at First Bank to my brother's account or my sister's account at Diamond Bank. So as I'm transferring that money, there's a particular charges that is coming along with that transfer. So that charges is bear by me, and my account is debited for that particular charges. So that is called fund transfer charges. So we also have collection charges. What are collection charges? Collection charges are charges that are charged on collections on behalf of, let's say, schools, on assumption that, now let's assume that we have Bowen University and First Bank is collecting school fees on behalf of Bowen University. So whenever Bowen University students walk into any of these banks to make payment for their school fees, there are charges that come along to that. So the school account receives the school fees and the charges belongs to the bank. So we also look at commission on turnover. Commission on turnover is also called COT. Now how does COT apply? It's always most times 5 naira per mil, but there's a new rule now in Nigeria by the CBN that says we shouldn't call it commission on turnover again. We should call it current account maintenance, and it's charged now 1 naira per mil. So meaning that for every 1,000 naira you make a withdrawal of, the bank is going to charge you 1 naira. If it is a current account, this is not charged on savings account, only on current account. So the bank charges you 1 naira on every 1,000. That is called COT. So let's look at the example we have in slide 4, and we will move on from there. So outside the examples that were given under the meaning, let's also look at these examples. First, we are going to look at withdrawal booklet charges. We are going to look at SMS charges. We are also going to look at account maintenance charges. We are also going to look at COT and the 15 naira stamp duty per transaction on current account holder that was just introduced by the federal government of Nigeria. So let's take the first example, withdrawal booklet charges, and we say these are charges that are done against a customer that operates a savings account so as to grant the customer a withdrawal booklet for withdrawal on his or her account. So for someone who open a savings account with a bank, is going to be given a savings withdrawal booklet, just as someone who has a current account is given a checkbook. So this savings account, this withdrawal booklet is given to the savings account holder, and the bank charge the customers for that particular booklet. So what happened is that the customer account is going to be debited with the amount of the charges, and the bank general ledger, which is fee and charges, will also be credited with the amount. So let's look at the second thing, which is SMS charges, and we say that these are charges that are levied against customer who subscribe for short message service on any transaction done on his or her account. So the SMS charges come in this way, that whenever any transaction is performed on your account, you receive an SMS charge, an SMS alert, from the bank. So these services also come with a cost. So these costs are also debited to the customer's account and become an income also to the bank. Let's also look at account maintenance charges, and we say these are charges levied against customer account by the bank for operating a particular class of account with them. The customer are charged on monthly basis on the amount the bank wants to charge. So these maintenance charges, this is the way it works. You can just say that, okay, because you open an account with us, because you operate an account with us, we are going to be charging you maybe 100 naira on monthly basis for maintaining this particular account with us. It may be like let's say a current premium gold, or there are different kinds like that. So they will just charge you for a particular amount. There are definitely going to be an agreement, and they charge you for that. So that amount is also debited to your account, and the bank receives that as part of their own fee and charges income. So let's also look at commission on turnover, which we've earlier explained, but let's just look at it again. We say COT is a commonly used abbreviation for commission on turnover. It is a charge levy on customer withdrawals by the bank. COT charges are typically calculated at 5 naira per mil. The 5 naira per mil means 5 naira for every 1,000. So it is always calculated at the end of the month, applying the percentage on your aggregate withdrawals from the first day of the month to the last day of the month. So let's just take a scenario. Let's assume that I make a withdrawal of 5,000 on the first day of January, and I make another withdrawal of 10,000 on the 15th day of January, meaning that I have made two withdrawals now, one 5,000, one 50,000, making 20,000, and I make another 10,000 withdrawal at the end of the month. So the whole amount of withdrawal I've made is how much now? That's what? 30,000. So how are we going to, we said that it is what? 5 naira per mil. So meaning that for me to get how much my COT is going to be at the end of the month, I have to multiply 30 times 5, which is going to be 150 naira. So that's what my COT is going to be. And so my COT is going to be 100 and how much? 50 naira at the end of the month. So we also have the 50 naira stamp duty per transaction on current account holder. This is a new charges that the federal government authorized the bank to be receiving from everybody who make a deposit into their current account. But in this particular one, salaries account are excluded, and if you're also transferring from your savings account to your current account, is also excluded. So it applies to every other thing. So it's in a bid to explain more non-oil revenue, the CBN directed all commercial bank to charge 15 naira on all deposits into customers' accounts. Now this is also a charges, but at the end of maybe the year or anyhow, the commercial bank remit this money back to the federal government. But that's not the point we are looking at. We are just looking at it as a bank charges on our accounts. So now let's look at the accounting entries that are involved in bank charges. So whenever bank charges are applied, what happens? The customer account is going to be debited, meaning that the balance the customer have will reduce by that amount in which he has been charged, and bank charges is also credited with the bank, which is now going to be the fee and charges income. So bank charges is an income to the business and is debited to the customer's account. So thank you very much. We've come to the end of the class. If you have any other question, you can get across to me. My name is Idowu Agumiade from Client Relationship Management Unit. Thank you very much and have a wonderful day.